All right. Good evening, traders. Today is October 21st, 2024. This is the BYOB Trading .com. My name is John Kerrigan. I moderate the BYOB Trading Room. Tonight's presentation is on entry placement. Evening, Sunny. Let's take a look. Let me just go over a few things. Okay, I'm a day trader for the most part. All right, so I do some position trading where things will be held over night onto the next day, and sometimes the day after that, and sometimes the day after that. All right, so I do a little position trading. I do a little day trading. Okay, so a lot of my entries are based on a smaller time frame. Now, let me just say that, when you use a smaller time frame, it's not as reliable as the larger time frame. Now, you guys seen securities and indices before. They both can get erratic at times, but for the most part, if you're doing a day trading, if you go down to the smallest time frame, maybe like a tick, 1 minute, 2 minute, sometimes those 1 minute, 2 minute trends don't last too long. Okay, so I tend to gravitate toward the 10-minute chart, and the reason being is that I can stay in those trades a little bit longer. I kind of like the trades that last for 4 hours or for a good part of the day. I'm not real big fan of trends or 2-minute trends that happen to end after 20 minutes or 30 minutes. Okay, I will take some, but for the most part, I kind of like the 10-minute trend. If I can find a nice 10-minute trend that's going to run all day, that's going to be one of my favorites, really. All right, so I'm going to go over what we do here. Okay, when you come into the BYOB trading room, all right, or when we do our day trading there, we like to trade 10-minute uptrends or downtrends, okay, over a pivot which is established by me based on the previous day's activity, showing us where a common area where price kind of pivoted back and forth over, okay? And we're looking for green candles to erase red candles, and preferably before 2:30, because after 2:30, market's kind of getting wrapped up, and it's nothing but quite a bit of volatility after 2:30. Now, we do take trades after 2:30 if there's a trend and it's still running. I'm just saying we try to find something that's going on before 2:30. After 2:30, we might not take a full position, maybe a partial position, all right? Just to kind of like be in the trade, but we don't want to risk a whole lot because the volatility tends to be just a little bit higher. Okay, now long trades have better performance when they're taken after support is tested and you see the bulls step in, all right? So you take a trade, a long trade, right up underneath resistance. It's not my favorite. It's a good chance. It's like trying to jump inside of a room with a very low ceiling. Okay, it's not easy to get through that. Okay, so I like to take trades that are coming off of support. I find those to work out better than the ones that originate from a position just underneath resistance. Not to say that those don't break out, okay, but usually it takes 2 or 3 times for those to actually do break out. All right, so I post alerts as often as possible. All right, and let me go back here just a sec, getting ahead of myself. All right, long trade. I like to terminate the long trade when on the 10-minute chart, the 3 EMA crosses back underneath the 8 EMA. Now, I classify a 10-minute uptrend as the 3 EMA being on top of the 8 EMA and price on top of the 3. All right, so when I see the 3 cross back over, that means to me the trade's trade's about to end and I need to start tightening up my stop or get ready to terminate it, or either sell some options against it in anticipation of things turning around and possibly reversing or having a pullback. All right, so I usually terminate a trade when a daily goal is met, a target is achieved, or like I said, the 3 EMA crosses back underneath the 8 EMA. Now on a short trade, it would be the 3 EMA crosses over the 8 EMA. All right, that makes sense, right? You guys understand that? On a downtrend, the faster moving time frame would cross over the slower one to terminate the trade for a short play or a short trade, which is moving in the southern direction or moving down in price. Okay, I post alerts as often as possible. I can't post them all because I do take a lot of micro profits as price moves up and away from the 3 EMA. I like to take profits when price moves away from the 3 EMA, like on an uptrend, and then I like to reload at the 3 or at the 8, sometimes both. Okay, we prefer out of the money options. They tend to be a little bit cheaper. You can get a little bit more, and we like them that expire on Friday. On Friday's particularly a better day because you got a lot more open interest. Not only that, you got sometimes you got the weekly options, and as well as some Fridays, especially options expiration Friday in the month, you get those monthly options as well. I like the 1 day till expiration and 0 day till expiration, but I prefer the out of the money ones that expire on Friday. Okay, I offer coaching for free, for a fee. All right, but let me just say, if you're a member of the BYOB Trading Room, I offer 15-minute one-on-one sessions so we can get you the help that you need. And a lot of times these 15-minute sessions run well past 15 minutes. And the big thing is I want you to be able to succeed. Okay, we offer 30-day trials for $49. You can see Ed posted it up there at the top of the chat window. Okay, now I'm going to be surprised if you guys don't recover or recoup the cost of your subscription or your trial or your whatever it is you've paid to be a part of BYOB. I'm going to be surprised if you're not making that back in the with the options that or the entries that I'm giving you in the room. Okay, so if you find yourself in a situation where you're consistently losing money in the BYOB room, or any room for a matter of fact, okay, you're advised, okay, I urge you to get with me as soon as possible so we can turn your trading around. Again, I encourage paper trading, all right, only because I don't want anybody to lose money till they're confident about their trading ability and trading skills. I encourage you to do paper trading until you're ready. And when you're ready to start using money, I urge you to please use little bits at a time. Come in with like 5,000 or 10,000. Start with that. See if you can make that grow. If you can't make that grow, go back to paper trading. All right. And if you can make that grow, then you add a little bit more. Now you're up to 15, maybe even 20. Okay. So it's essential that you're making money and you're not losing money. The last thing I want to see is for a trader to lose money. Again, I do 15-minute free one-on-one sessions. I do them on Skype, so you're gonna have to like download Skype, and then we do them right on there. You can talk to me, I can talk to you, I can share charts with you on Skype, and we can go over your trades. We can look at whatever you want to look at. I'm ready to help you with your trading. That's why I'm here. Okay. You will not even be able to help yourself, okay? Tracking trades is essential for performance growth. You can't even help yourself unless you track your own trades, all right? So I encourage you to track your trades so you can see when and where that trade went sour. All right, here's the bottom line here. I'm not a success unless all you traders in the BYOB trading room are a success. Okay, And because of that, I'm committed. I will give you 15 minutes, one-on-one sessions. We'll do as many as it takes to get you back on the right track, okay? That's the way I feel about BYOB trading. My objective is to get you to the point where you don't need me anymore, okay? I want you to be able to trade without me. Don't want you to leave BYOB, but if it happens and you get so successful or you find yourself in a position where you don't need the BYOB Trading Room anymore, that's just awesome, okay? But I'd still like to hang out with you. So again, I'm not a success unless you're a success. And my goal is to get you to the point where you don't need any coaching or anybody to look after you or anybody to help you anymore. You're completely independently making your account grow week after week, okay? So wishing you the greatest success in trading and in wealth building, okay? So I wrote that up because I'm committed to that, all right? So I urge you all to think about getting a $49 30-day trial, all right? Because I will be surprised if you don't make your $49 back, probably even in one day, all right? I haven't seen too many days where we haven't made money. All right, so let's get down to basics here, okay? So here's SPY. This is the trade. This is the chart I trade the most, is the SPY. I trade the 10-minute chart. Don't tell me it's not going to work. Hold on. All right. Let me just reboot this. It's being difficult. I don't know why. And crank it right back up. Bear with me. It's coming right back up. And here we go. Can I show you how I track my trades? They're all tracked right here. Every one of them. Every one of them's tracked right here. Every single one. I know where I enter, where I got out. All right. If you need a trade tracker, Ron, I should have one in my room. If not, send me an email, Ron. And here's my email address. I'm going to type it in there now. All right, you send me an email, I'll send you a trade tracker. All right, is that fair? All you got to do is email me. Okay, Ro? All right. All right, so today we took a trade on gap fill because the market was bullish. Why was the market bullish? Because it made a higher low right here, and it made continuous higher lows, all right? And it held on to this higher ground up here. So let me just show you what I like to look for. See, price moves up, and then it holds the higher ground. That's bullish. So the first trade out of the gate for me, all right, was right here, was price coming off the bottom here, okay, and to fill gap, all right. So I bought some calls. I don't remember which calls I bought. I think they were the 590, and they expired on Friday, all right. And we traded that right up to there, and from there you can see price reacted with a downward move, all right. So my pivot today was 583.80 right here. You can see here's the line. Okay, so I'm looking for a 10-minute downtrend underneath the pivot where red erases green. So what would be the green? All right, you see this move from this low up to the gap fill right there. That's the dotted dash line right up top there. Say from this low up to there. So that's red erasing green. So right underneath of that, I can enter. All right, as soon as I see red erase green underneath the pivot, I got a 10-minute downtrend. How do I know I got a 10-minute downtrend? I got price, which is the candlesticks. See how they're spiking down underneath the 3 EMA. That's the thin yellow line. Okay, so both price and the 3 EMA are underneath the white EMA. All right, that's the 8 EMA. That's the white line. Okay, so you can see price and the 3 are underneath the white 8. All 3 of those are also underneath VWAP. That's the burnt brown line right here. Let me just going to scrunch that, kind of blow this up so you guys can see like a better picture. See the 3, and then here's the 8, and then here's VWAP is the burnt brown line. Okay, now the market's bullish, so I'm not a big fan of shorting the market. Okay, not a big fan of it. I'd much rather like to play the long trades to the upside because the market is so bullish. I'm not against playing the short side, but I prefer to play the long side because we have a daily uptrend, a weekly uptrend, a monthly uptrend, probably a semi-annual uptrend, 2-hour uptrend, and probably an hourly uptrend, okay? But right here we had a 10-minute downtrend, and that's price. See the price underneath the 3 underneath the 8, all 3 of those underneath the VWAP right there. So there's the trade down. So I can enter when red erases the green activity. So the green activity, I'm going to box it off. Okay, so this is the green activity. It originates from right here, and it goes up to the top of the wick of that candle. Right there. So my short entry happens underneath, 10 cents underneath the wick or the tail of this green candle right here. Because now we've broken through the bottom. All right, that's what I'm looking for. Right through there. So this is my entry candle. You see my entry candle? I'm going to point to it. Okay, because this candle is the one where price is now under and has red erasing green. Okay, that's my entry candle. Okay, now I don't know it's my entry candle till it finishes. Okay, it's imperative that it finishes first. Got a few questions. Tom, are you trading with IB through TC2000? No. Dave, where do you like your VWAP anchored? I prefer them on the all-time highs or the most recent high, especially if we're bullish. Okay? I do like to take a 5-day anchored VWAP and even a 2-day anchored VWAP. Okay? So let me go over that for just a second. Dave wants to know where I like to anchor it. Okay, so you see the high of yesterday or the day before, let's say the 18th. That would be Friday. So I like to take the anchor and put it right up there on the top. Okay, so when price is over that, I want to be bullish. Okay, when it's under that, I want to be bearish. Now, a lot of times, I like to anchor it on the first candle of the previous day. Right there. Okay, now if I got a 10-minute trend above it, I want to be bullish. If I got a 10-minute trend below it, I want to be bearish. I got a 10-minute downtrend, and you can see the biggest candle, okay, is the last candle. Notice the biggest candle is the last candle, kind of signaling the end of the move. This kind of signaled the end of the move. Then we had a doji. Then they gave us one more to flush right there. You're welcome, Dave. All right, so most of my anchored VWAPs, you can see these pink lines are on prior highs. Okay, I'm of the opinion that when price is over those prior high anchored VWAPs and it's moving up, money's flowing into the market. I'm going to take this off right now. Okay, so we have a 10-minute downtrend. This is my entry candle. Now, I don't know it's my entry candle till it closes. It has to close red. All right? Why would it have to close red? Because I don't want to buy a bullish candle if I'm going to short the market, right? Does that make sense, everybody? Do you want to buy a bullish candle if you're going to short the market? Anybody? No, it doesn't make sense to do that, right? Okay, so you want a red candle. What else? We don't want a doji candle, because what does a doji candle tell us? Doji candle tells us we've got rest or we've got indecision. Right. Exactly, Bob. Exactly. Love it. All right, so we've got either rest or indecision. So we don't want to buy a doji, and we don't want to buy a big bottoming tail candle. See this candle right here? We don't want to buy that candle. Okay? Why? Because there's more tail than there is body and wick. All right? The bulls own that candle. Okay? If I'm going to short, I don't want to be buying that candle. Okay? Because the bulls own that candle. All right? So I don't want to buy that candle. I don't want to buy the doji candle. And I don't want to buy a green candle. So if that was a red candle right here with all of this tail at the bottom, that would tell me stay clear of that. It's not ready yet. All right? So I don't like to buy that one. I don't like to buy the doji. And I don't want to buy a green candle. Okay, because I'm trying to short it. So I want evidence, all right? I want clues that the market is going to get crushed, okay? That people are selling, that the bears are stepping in at this moment in time, all right? That's what I'm looking for. And where am I? Also, I'm up at a point of resistance. That's an all-time high right there. All right, so obviously bears wouldn't let this go any higher. See, this is selling pressure. Okay, price moves up. Okay, price moves up, and then they give it up. All right, that's selling pressure. That's the equivalent of a bearish engulfing move, where price goes up and price comes all the way back down. That's neutral. Now, if we go up and we come down further, that's bearish, okay? So I'm looking for clues as I go throughout the day, all right? So I noticed I put my pivot in here, 553.80. Why? Because this was the price action from Friday. Notice price goes up to this point and stops. Price gets above it and comes back and checks it for support. We rally above it like in an MMRP up there. Come back and test this point right here. Go back up a little higher. Couldn't make a lower low. We try to make a significant higher high and we fail. So we come back to the same point and we bounce again to the backside of this uptrend line. All right. And there's your gap fill right there on the dotted dashes right there. So I'm looking for price to break through this area right here. And that's why I labeled that as my pivot, because I can see where price went up, came back and hit the mark. Price went up, came back and hit the mark. It's telling me that this is an area of importance. Okay, this is where the market is telling me that this is an important number to the market. When it comes up through it, comes back and tests it. When it goes up and comes back and tests it. Goes up and comes back and tests it. Goes up and now it comes through. All right? So now when it's coming through, doesn't mean it has to flush like it did here. I'm looking for clues. I don't want to be buying green candles that are bullish. I don't want to be buying even red candles that are bullish, where we got more tail than we do wick and body. All right, and I'm not looking for a green candle, and I'm not looking for a doji candle, because that shows me the market's ready to rest. That means they're already tired from where they just getting to this point. Okay, you don't want those. I don't want those. I want a nice red candle like that. That's beautiful. Then I can pick my entry and I look for the downside. And my targets would have been 580, 581.15. Okay, now why would my target be 581.15? Okay, let's go back and look. See where price comes up to that point right there? Right there. See where price comes down to this point right here? Okay. This is the market telling me this is an important number. See where we gap up? Right there. Come back down. Come back down. Come back down here. Come back up here. Up here. You see what the market's showing us? This is the important number. So that's going to be my target right there, this 581.15, 581.10 area, right like that. Okay, so I pick this as my short. Now, when I first get in, okay, when I do an entry, and I like to pick Friday options, they can be, okay, they can be this Friday, as in 4 DTEs, that's 4 days till expiration, because today's Monday, all right? Or they can be next Friday, okay? That would be add another 7, makes it 11 DTEs, okay? So they can be this Friday or next Friday. Why? Because they have more open interest on Fridays, all right? And then where do I want to pick? I want to pick probably a couple dollars out of the money. So if I'm at 584, probably want some 582s or some 581s, all right? And that's the put that I would select. 581, 582, 4 DTEs or 11 DTEs. That's 11 days till expiration. All right? And then I play this until I see a clue, all right? Till I hit my target. This one happened to hit the target, and at the same time as hitting the target, it gave us the biggest red candle at the end of the move. Okay, notice the move. All right, here's the move. It starts from up here, and it keeps coming down. See how it keeps coming down and down and down and down. All right, there's the move down from the high down to the low. Notice the last candle is the biggest red candle, almost signifying the end of the move, okay? You have to wait and make sure that the move is done. A lot of times they like to do another 1, 2, 3 after that, okay? When you see the biggest red candle near the end of the move into the target, there's probably a clue it's going to bounce here. Most of the time, when you get support, you get a $1.50 bounce. If you look at this, this is 8.15. All right, 581.15. Where did it bounce to? Let's just take a look. You usually get a $1.25 bounce. I'm not sure where it bounced to, but I'm into the crosshairs. Okay, 582.62. Okay, so that was like a buck, almost a $1.50 right there. Okay. 582.65. There's a $1.50. Okay, because that'd be $1.50 from 582.65 brings you down to 581.15. Right there. Okay, see that? Biggest red candle at the end of the move, kind of telling you this may be the end of the move. Now I want to see, guess what? Green erase red in a 10-minute uptrend back to the pivot. All right, so now I'm looking for, here's the green, there's the red. So I'm looking for, there's the red. I don't include the wick. So right over the body of that candle is an entry to the upside. Okay, you got a bullish engulfing 10-minute uptrend. Green erases this red candle right here, and it's the biggest red candle. There's my entry to get in right there on this candle right there. Got some questions. Hey Yatish, how you doing? Can you explain how you draw your support and resistance line? What do you reference? Okay. Okay, I'm not trying to be funny, all right? But on TC2000, I just pick up this thing that says H line, that's horizontal line, and I just smack it down wherever I want it, okay? Now, what do I look for, okay, which is what I think you're asking, okay, to make me say that's where that line goes? I look for price to show me where price comes down and gets rejected, all right? Bull stepped in here. See how the bull stepped in here today? Okay? That's support. Okay? See how price came up and came down? Right here. All right? See how it came down? And then from there, they rocketed off up to there. That's showing me that price got up, came back to support, and then ripped to the upside. Okay? Most of the times, resistance becomes support most of the time after price breaches the resistance and holds up above. Okay? So you're looking for locations where price came down and stopped going down. Okay? Came down and then bull stepped in and bought it up. That's what you're looking for. See how price comes down and then bulls brought it up. Price came down right here and the bulls bought it up. 3 times. See this bounce? The bulls bought it up from there. Okay? Price came in right here, opened up, and the bulls bought it up. Okay? That's what I'm looking for. That's my support and resistance line. I'm looking for a location where I see price comes down and then moves back in the other direction. Okay, so like right through here, you can see there's probably some support and resistance right in through here. You can see these wicks and these tails. Look for the tails and the wicks to kind of come to a common area like that. Okay, see that? The wicks come to here, the tails come to there. That's a common area. Okay, if we go over here to the price, you can see, look how close that was. I didn't even see this over here, but you can see where price comes down and stops moving lower. And then bulls step in. Comes down. See the two 10-minute candles? And stops moving lower, and then bulls step in. Okay, that's how I do it. I'm looking for the way price reacts at this location. Now, I can't just do it one time. It has to do it. I have to see a pattern of over and over. This is happening at the same location each and every time, okay? You don't want just one instance. It's just like one red candle doesn't make a pattern, okay? So one valley, okay, and I call them valleys. So one valley, I'll call this a valley. One valley doesn't make a pattern. I want to see multiple valleys. Here's one valley. There's another valley, okay? I want to see multiple valleys. All right? And I also want to see multiple hills, okay? I want to see that as well. I want to see where price moves up. Okay, so here's price moving up. See the green? Green goes up and then comes back. There's a hill. There's a peak. Okay, here's a valley. This is a valley. That's a valley. You see what I'm saying? This is what's showing me the price action. Here's a valley. You can just play with this. There's a valley, another valley right there. Okay? It's showing you by the price action that it's doing. You look for where the valleys and the peaks line up, and there you're going to find your support and resistance. Does that make sense? Where do you set my stop after my entry? Okay, so you know what? That's an awesome question, and I'm gonna drill down into that right now. Okay, so all right, let's just say I entered on this candle. Okay, Sean, let's say I entered this candle, right? Because remember, the support was broken, right? You see it. They really spiked it hard. All right, I don't know that this candle's coming, this candle or this candle. Okay, because I don't know what's going to come, I have to be protective. Okay, so for this trade right here, my stop has to, the origin of my stop starts here, 10 cents over the high of day. Okay, because that's where the red erased the green, right there. There's the green. That's the top of the green, 10 cents over the green. Okay, now I don't watch whatever the price is doing here, all right? Because I already know this is going to decay. The shorter expiration date options are just going to decay like madness, like a snowball on Miami Beach. That's my favorite saying. All right, so I watch the price. The price has to break 10 cents over the high of that. Now that's a long ways down. Think about that. That right there is 584. That's 585. Okay? In this candle, 583.69. That's $1.50. You have to decide whether that trade's good for you. You may decide, or I may decide that, you know what? Instead of buying 20 contracts, I'm only going to do 5 or 10. Okay? I still want in on it, all right? And I know my stop has to go way back here. So in order to keep my risk in line with my trading plan, all right, let me know if any of this is foreign to you, okay? In order to keep my risk in line with my trading plan, all right, I can only take a half of a position that I would normally take because my stop has to go 10 cents over the high. Okay? Does that make sense? All right? So what I do is I draw a little buy box in here. Okay, this is going to be my little buy box. Okay, as price comes down, those puts are going to go up. Remember, it's a put. So when price comes down, the put, the value or the price of the put increases. Okay, so as price comes down and as the put decreases, I can buy all the way back up to here. Okay. When we get to about there, about 3/4 of this box, I have to decide whether I want to continue buying puts as they melt down, okay? Because my stop is not much further away, all right? Now, when I trade, okay, I'm a little bit different than other people, all right? I like to shoot a shotgun. All right. I like to spray orders in there. Okay. So I don't put one order. I put one order to enter here. I'll put another order. All right. A little bit lower because it's a put. If price pops up a little bit, I'll put it a little bit lower. I'll buy 2 more contracts as price dips a little bit on the put. I'll buy 2 more here, 3 more there, 4 more there. You see what I'm saying? I stagger them out and spread them out. Instead of just doing 1 entry, all right, I do multiple entries, okay? Remember, I'm trying to get my cost to the best it can be without being a bottom picker or a top picker, okay? And I hope that all makes sense. You don't have to do 1 order. You can spread out your orders. It doesn't matter. It's going to cost you the same amount, okay? Whether you bought all of your contracts at $1.58, okay? So if you bought all 10 contracts at $1.58, you're still going to pay the commission. Let's say you're buying 10. You're still going to pay the commission on 10 contracts. But if you can get 2 at $1.58, 2 at $1.55, 2 at $1.54, 2 at $1.51, and you see what I'm saying here? Until you get to 10, now your average cost is lower, all right? And you're still spending the same amount on commission. It doesn't matter. It pays to spread them out. Now, if it takes off without you, so what? You're still making money. The biggest thing, you don't want to chase it. Last thing you want to do is chase it into the bottom of this and then have it rip back on you, right? We don't want to chase, all right? We want to enter a fair amount, and then we kind of spread out some other ones. That's what I like to do, spread them out a little bit higher, or they be lower if they're puts, you know, and try to get a better entry. It doesn't matter. I'm going to pay the same amount in commissions. I have, Sonny, I have strategies where on the last 30 minutes of the day, it's called a thriller trade. And I have sometimes played 0 DTEs into that. Now, okay, they don't always work out. Let me just say, I have decided recently that it would be better to play more of the 1 DTEs rather than the 0 DTEs, okay? I would do some zeros, but I prefer the ones, because it tends to, on the thriller trade, price tends to close either at the high of the day at the end of the day or the low of the day at the end of the day. So if it was a put and it was going to close at the low of the day at the end of the day, and it was a thriller trade to the downside, okay, I would go with the 1 DTE. All right, and I would also try a few zeros along with it. All right, but I prefer the ones. Only because they give you that extra day for price to gap down into the next day. They tend to work like that. Whenever I see price kind of end the day at the high of the day, there's usually a good chance it's going to gap up. Okay? Now this today did not end the day at the high of the day. Okay? Notice it didn't do that. This was the high of the day. But there's days that price does end the day at the high of the day that I'm interested in holding, only because many times price will gap up even higher the following day. Dave asked the question, and I know I saw your question, Dave. Just want you to know that. I'm not ignoring you. Dave asked, did you decide between long puts or short calls based on volatility, or do you just focus on long options? I try to focus on long options and keep it as simple for the members of the room as I can. I do a lot of spreads, but I try to focus on getting the members in on a trade that is either going to be all short or all long, Usually I reserve my my selling of options for times where I see price is likely to stall and just chew up time. In other words, if I see price just kind of consolidating, then I would point out to members that I see price just consolidating and chewing up time, and I'm thinking about doing some put spreads because the market's bullish, okay? And they would be bull put spreads. Or I'm interested in doing some bear call credit spreads because the market just did a triple top here, and I think if it doesn't break the triple top, I think those credit spreads will hold. Does that make sense, Dave? Yeah. Whenever I see price in a place or a location where I feel like it's probably going to get stuck there for a while, all right? In other words, it's going to be there for a while, I like to do spreads whereby the contract that I'm selling short is just going to decay as price just grinds away in the same spot, spinning its wheels. Okay, so when you see price do that, that's for me, that just makes sense to do that. Now, right now, everything is super bullish. Okay, I mean, really, everything. I mean, all of the Fab Five are bullish, and I'm talking about FNGU, SPY, Diamond Dow, DIA, IWM, QQQ, and SPY. Okay, so all of those are in daily uptrends. All of those are up over prior all-time high anchored VWAPs. Okay, money's been flowing into those indices for a while now, for at least a couple weeks. All right, because if you got uptrend over the all-time high anchored VWAP, it's my opinion that money's flowing in to that indice or that security. Anytime I see that, that's interesting for me. Like, I know a lot of you guys were playing OCLO. All right. Okay, let's just go to the 2-day chart. Okay, let's just put in, this is a 3-day chart. I'll go to the daily because we don't really need to do it. You can just put an anchored VWAP right here. Okay, that was the all-time high, right? Until all of this. Okay, whenever I see price over that, okay, see how price got on top of that. Look how price comes right up to it and then fades. See this? This is a powerful tool, this anchored VWAP. I encourage you guys to use this. And if you don't have it on your platform, let me just say that Wall Street IO has it, and they have real-time charts, and they're free. Okay? So I don't know if you guys have this, but if you don't have it, this is a free, and you can get on this. This is free. All you got to do is give them a valid email. Now they'll send you a lot of emails, but just ignore them. They're fine. Okay, some of them are interesting, but they have anchored VWAP right on their platform, and they're free. Okay, because I know a lot of you guys trade off of TOS. Okay, and I think on TOS you got to code it in and code it out, but Wall Street IO has it right on theirs. Okay, yeah. Thanks, Bob. So Wall Street IO has it if you're ever interested in seeing it. But I know a lot of you guys were in OCLO with Rick's trade. Nice trade, by the way. You guys nailed it. Okay, see how price is up over? See how price comes up underneath it? Reject, under, reject. See, here's the valley. Okay. Here's the valley. So they went down, and then they lost it. So when you go up and you give it up, that's neutral. Okay, when you go up and you give it up and more, that's bearish. Okay, when you go down and you bring it right back, that's neutral. That's neutral. Okay, now notice, now we go down and we give it up and more. That's bullish right there. That's telling you that's bullish. See the pullback? And then you get the catch. See the catch on the 200 SMA? And then you get the rip. Beautiful chart right there. But this is all about just knowing price action. Okay? You go down, you give it up, that's neutral. Okay? If you go down and you give it up and more, that's bullish. Okay? This is bearish. That's neutral. Okay? Know your price action. Okay? See the biggest red candle at the end of the move? Boom. Price bounces. See it? Okay? You're looking for the biggest green candle at the end of the move. It almost looked like it was here. And I got to tell you, they're probably going to give you 1, 2, 3. Here comes the next one. I don't know if the next candle is going to be as big as this one. It might be might be half that size. But I'll bet it goes up there tomorrow morning just a little bit higher. Maybe up to 25. It goes up, and then you go 1, 2, 3. That's the exclamation point on the end of the move. 1, 2, 3. Watch for that tomorrow. Okay? Anyways, there's the anchored VWAP. You see the catch, you get the rip. There's money flowing into the market. Okay? So there you go there. That's ACLO. All right? So I hope I answered everyone's questions. Okay? You guys see how I do the buy box. All right? All right? You see this? Price breaks out right there. So my buy box, as price breaks out, green erases red. Okay, this is a daily chart. Okay, I have to put my buy box in like this, like maybe 20 cents. It's a daily chart, so you're not going to do 10 cents. So you're going to do like 20 cents underneath that. Okay, that's your buy box as price comes up. Now notice it never pulls back. All right, it just kind of goes up, up, and up. All right, then you got right here. See this? Green erases red. All of this is the red. There's your entry right there. Green erases red. There's your entry right there. Green erases red. There's your entry right there. See how easy this is? Green erases red. Jump in. Right there. It just makes sense. The bulls are stepping in. You know, the bulls are stepping in and they're showing you they want in. All right, this is money flowing in. Green erases red, get in. Green erases red, get in. Red erases green. I don't use the tail, so it would have been right here. At that point right there. 2-hour chart's a beautiful chart. I don't know if you guys trade the 2-hour chart. For me, it's part of my game plan. I like to trade the 2-hour chart when I like to swing trade. So you want to see the same thing on a 2-hour chart. We can do that. Okay? It's the same deal. Green erases red. Okay? There's the red, there's the green. There's the red, there's the green. There's the red, there's the green. Right there. See that? There's the red, there's the green. There's the red, there's the green. See how this goes? You can just keep doing it over and over and over. Or you can choose to stay in your 2-hour chart Okay? Because the 3 never crosses the 8. And instead of getting out, you add. Instead of getting out, you add. Instead of getting out, you add. You add. Right there. When you get in the habit of adding, your whole trading, you got to add at the right time, okay? Not everything is an add, okay? But when you see price action enough times, and you'll know when it's time to add, all right? And when it's just time to just stay normal, all right? All right, so bottom line, it's 9 o'clock, all right? I want to help you be the best trader you can. On the low of the 9th, on which chart, Jim? So if you got any questions or you want to be a part of the BYOB experience, Ed just dropped a trial in there. It's only $49. And I'll be super surprised if you don't make $49. All right? On Oklo on the 9th. And Jim says on the low of the 9th. All right, let me just take all that off. And the low of the 9th is... I've got October 9th, or did you mean another month, Jim? September 9th. Kind of thought you did. September, right here. So Jim's showing us the bullish engulfing right there. And drop an anchored VWAP right there. Yep, you got the VWAP cross. I think, let me just take this out just for a second. Yeah, there's the VWAP cross. Right there. See how I'll color this one different. So there's the VWAP cross right there. And then you got your rip right there. All right, any questions, any charts? Anybody? Did anybody find this helpful? All right, my objective is to help you be better traders. Okay? I'm a short-term trader. Oh, awesome, Bob. I love that. Dave H., do you look at global market signals like VIX, TIX, and USD bonds, or do those actually add any useful context? I look at, I don't know if you've ever listened to my morning videos. Let me just pull one up here just for a second. So you can see I have a bunch of videos. Dave. I do a morning video and an afternoon video every day. Okay, so this is my content. Okay, every day I do a morning video and an afternoon video. And this is what my channel looks like. I hope you subscribe if you're not. Right here. Okay,
all right, today is like June 29th, 2023.
There's the market wrap up. There's the morning.
We've got
analysis.
2 10-minute candles. We've got one 10-minute candle.
All my
and
morning
a 10-minute candle
wrap-ups
here. It's
and analysis.
9:44.
Let me make sure I got
basically
this off.
9:45.
It likes to talk when
We've
I'm not
got
there.
a 3.
Okay, so let me just trash that out. But that's what my channel looks like. All right. So in the morning, I look at, this is what I look at. I look at the earnings reports. I look at the economic calendar. Okay. I look at Max Payne. It's coming up. It's slow. And I look at the US dollar index. We were in a downtrend. I've been following this religiously for a long time. And now we're in an uptrend. See how we broke the highs here? We made higher highs. So we broke the downtrend because we made a higher high. And then we just broke this high now. And now we're up into this. See the valleys right here. So here's a valley. There's a valley right here. You can see we're right up next to that valley. Here's a valley here. There's a valley here. Okay, and you can see we've gone up. And there's a peak coming right into those valleys. Now, we got a big green candle. Not my favorite. I liked it when the dollar was weak. I hope we get a bearish engulfing tomorrow, but I'm not going to count on it. And I hope we come back down to here. That's what I hope, but I don't know if I don't always get what I want. What time do I post in the morning, Johnny M? I post. You should get it in an email if you're part of the emails process. It usually does not get posted till about 9:10, 9:15. Let me see. Yeah, about 9:10 or 9:15. It's kind of late. I just rendered my video. I do it live. I do it live in front of all my traders and everyone in the room. Hey, Dave, thank you. Thank you. Dave's going to try to get into a trial. I love it. Thank you, Dave. Appreciate that. Yeah, if you're ever in my room, I don't know if you ever seen my room, but I trade right in front of you. Everything is traded right in front of you. Everything that I do. So, I mean, you can see every trade I take. It's all traded right in front of you. The good and the bad. You see it all. You see all my positions. The good and the bad. All of it. I trade right in front of you so you can see how I trade. And I do green erases red. And I'll just show you an example of what it's like in the BYOB Trading Room. Okay. You get one of these. This is for the red entries right there. Okay. If we have a 10-minute down, this is always on the screen. Below 583.50, first entry right there. See, I'm even showing you where the entry is. Second entry below 582. Okay. And then here's the green. So you get to see it all. Like right here. I map it out for you so you know where it is, green erases red, that I would enter. Right there. See, this one never triggered. But I'm happy someone's going to take a trial. I love that. Thank you. All right, traders, that's it for me. All right. Take it up on those trials. All right. Appreciate it if you come hang out with us. Like I said, I'll be surprised. Hey, you know what? For $49, it's worth the free coaching alone. Think about it. If you could have a coach for $49, are you kidding me? That's insane. You go elsewhere, they're $400, $500, $1,000 to have a live coach. And for $49, you get access to me one-on-one coach on Skype. Look, I'm committed to making you a successful trader. I really mean it. I mean, you ask anybody in the room, I'm committed to it. All right? That's what it comes down to. Like I said in the picture. All right? I'm not a success unless you're a success. All right, traders, that's it. Everybody have a good night. Ed's going to reset the room. Appreciate it. Take it up on those trials. Appreciate you guys showing up. Hope the content was valuable. Hope you got something out of it. Like I said, use a shotgun. All right? Give it a couple times. It doesn't matter because you're going to pay the same in commission whether you buy them all at one price or you pepper them out throughout the buy box. It doesn't matter.